Good morning, everyone, and welcome to Weekly Profit Talk. As you might have gathered, we do this every single week. This is at 8:30 Mountain Time, 7:30 Pacific, 10:30 Eastern Time. We are mobile headquarters, and we're currently enjoying the sunny weather. Where are we again? We are near Klamath Falls, Oregon, in fact, and it is actually 8:30 local time here. So if you're looking at your watch and noticing that I basically gave you times that are an hour off, that's entirely my responsibility. So that's okay. I currently don't have anybody live. And if you're watching this on replay, doesn't matter what time it is. But I do want to add that we do this every single week and almost always at 8:30 Mountain Time. That is 7:30 if you're in LA, 10:30 in New York. Now let's launch right in. My topic for the day for this week is why your practice needs a mid-year financial health check now. Uh, if you are quite certain, as I'm quite certain that you're aware, we just ended a half of a year. June 30th basically is a demarcation point after which the second half ends, as well as the third quarter. It's basically the same thing on July 1st. So this is a fantastic opportunity to take stock of your financial metrics, and it can be a missed opportunity if you don't realize what's going on. So I just want to talk about it a little bit briefly, and hopefully you'll find this helpful. And let's go ahead and we'll launch in. So here we go, put this up for you here. Now, doubtless, we all understand that, and my business as well is a thriving medical practice. Certainly, life gets in the way, and you're busy all the time. You've got a full agenda. You've got people basically demanding your time all the time, but taking a little bit of that executive time of yours and taking a look at this is critical to the way that your second half goes. As you can see, I've made a reference toward blissful ignorance. That might be a little harsh, but basically you can continue to do what you do and just hope that the pieces fall into place. But honestly, if you are keeping track of the scoreboard like a good basketball coach, you're going to be able to call the plays as they come up. So the time is right now to determine how you're going to do in the third and fourth quarter. It's, as I said, it's easy to blow off, but the consequences can be your tax liabilities can grow larger than expected. That's certainly something you want to keep an eye on, particularly if your business is growing. Cash flow gaps widening unnoticed. That's always a concern because a business needs cash to thrive. Missed opportunities for strategic adjustments. And that goes without saying. What if, in fact, you're thinking about a capital investment, such as putting that new piece of diagnostic equipment into practice? You could quite easily miss the timing by not taking a look at how you're doing right now and looking at the second half of the year. So, and of course, the possibility of missing opportunities for savings as well as write-offs in your practice. So let's go ahead and take a look at this. There are 5 vital signs that you can test for right now. And this is why the timing is golden. We're just entering the second half of the year. First, revenue reality check. All you have to do, and it's the 9th of the month right now. Chances are, if you have a half-decent bookkeeper, you should have your profit and loss statements for the month of June and be able to look at your calculated metrics for the first half of the year, January 1st through June 30th. If you don't have that or don't know how to ask for it, it's fairly simple. You just need a year. You need a year to last month profit and loss, the statement of cash flows, as well as a June 30th balance sheet. Those 3 particular financial statements are what I call the Holy Trinity. The P&L is the metric that is closest to how you measure your business's performance in a way that the IRS is interested in. Basically, your revenues minus your expenses equal to your taxable income. So revenue reality check, that's simple enough. How much did you make in the first half? January 1st to June 30th, all you got to do is multiply by 2, and that's your projected income for the year. See why this is a critical time. It's easy to do the math. Same thing with expense examination and basically forecasting. Can your practice sustain your current rate of expense times 2? Tax projection preview. Let's talk about that just for a second here. You are, as a practice owner, likely taking some sort of reasonable compensation out of your business, particularly if you're an S corporation. And as such, you should be calculating your reasonable compensation so that you do have a net income left over, which is not subject to Social Security and Medicare tax. That's the whole point of being an S corporation. That net income is still subject to ordinary income tax, and it has no withholding. Now, I am asked all the time if you can just go ahead and increase the withholdings on your wage to cover it. You certainly can do that, but it's an unpredictable way to go about that. What you really want to do is assure that you're taking the proper withholding for the wage that you're taking and the net income that you're making, plus any other forms of income you might have coming in. You may be an educator, for example, or perhaps you invented something and you have side sales, or you might do something completely unrelated. Heck, you might be a musician and make a little bit of side money that way. So you need to pay tax on all your forms of gross income, certainly anything that the IRS is aware of. And what that entails is basically estimating the tax on the amount of money that you make that is not subject to withholding. Estimated taxes are due on April 15th, June 15th, September 15th, and January 15th of the following year. So as you can see here under number 3, it is my professional opinion that the 3rd and 4th estimated payment deadlines, September and January, are the 2 most critical. This is where you have a golden opportunity to pay as close to the exact amount of tax that you will owe based on your estimated income as possible. You want to slide into the finish line with tax season next year owing less than $1,000 or having less than $1,000 in a refund. Now, I'm going to say this again, and I continue to beat on this drum. If you over withhold, it sounds like, oh, this is a very safe way to make sure that I get money back next year and I won't have to worry about actually owing. So I'll just keep throwing money at it. But if you end up making estimated tax payments and withholdings and you have more than $1,000 in the United States Treasury, let's say or if I become your tax person, I'm able to calculate a $5,000 refund for you. You basically just gave the United States Treasury a $5,000 interest-free loan. You don't want to do that. So over withholding is also basically stripping you of the potential earning power of your cash. So ideally, if you have a good guide, you should owe, and the bullseye I shoot for is $500 either way. If I can do that, I feel like I've basically thrown the dart in the red circle. So tax projection preview is critical, and this is a great time to be doing that. Next couple of months will determine your payment for September 15th. So cash flow forecasting. We discussed that at length last week. I had a conversation about how important that can be to the success of your practice. Your future cash does determine your fate, and it guides your decisions. So profit margin analysis. Margins are what you keep relative to what you make. Basically, the way that states that, that's a math problem. If you take net income, and let's say your net income is $200,000, and your practice takes in $2 million in receivables and other revenues, then you have a 10% margin. Knowing these percentages, what we call accounting ratios, is also critical to your business because it gives you a way to measure performance from month to month. And as I've said before, and the whole topic of this conversation this week is the first couple of weeks of July is absolutely a beautiful and critical and wonderful time to make sure that you're taking a good hard look at your metrics year to date and basically ask yourself, how do I want my second half to go? So that's why we're here. Finally, I like to share what I think of as a Super Bowl halftime analogy. Um, I know that football is pretty ubiquitous in this country. A lot of people understand it. So you watch a football game at any time during the winter, and the guys are off the field for, 12, maybe 15 minutes. But when it comes time for the Super Bowl, it's a great big, huge gala extravaganza, and they have named performers and all kinds of other things going on, fireworks and parachuters, and it's like a national circus. But the thing that always strikes me is how long that halftime is. It can be over 30 minutes. Uh, I'm sure if I sat down and timed that, it'd be over 30 minutes. And it basically gives the team that's behind at the end of the first half an opportunity to sit down and tear apart their entire strategy, start over, and go back out and be a different team in the second half. And that's the analogy that I'm trying to draw. You can take advantage of this kind of thinking. By taking a hard look at your first half and determining how you want your second half to go, you can be miles ahead of the people that aren't doing this. So hopefully you found that useful. I'd like to think in metaphors. So I hope you enjoyed that as much as I did sharing it with you. And I look forward to your continued success as we begin the third quarter. And hopefully you're all staying cool and safe and well hydrated, you and your patients alike and your staff and everything, as the summer heats up. And it has been hot everywhere we've traveled, by the way. So be safe, and most of all, be as prosperous as you possibly can be by doing these hopefully simple steps that I've outlined and sharing this information with you. It's my hope that I've given you something to think about, and if this has been helpful in any way, then of course I'm very grateful. So let me end with sharing that we're coming to you live on one of three different media. We're on YouTube and LinkedIn as well as Facebook, and all three of these have in common some sort of comments ability. You're able to basically post a comment underneath the post that you may be seeing this in replay, or if you're watching it live. And if you would like to have more information about how we're able to guide you and your practice through your most prosperous growth cycle and eliminate your worries about taxes and give you a practice where you actually look forward to tax season, because it's a period of time in which you're actually able to measure the metrics of your practice the last year without fear or stress of having to suddenly find a whole bunch of money. Remember, taxes are not a dental appointment that you dread 11 months out of the year and go to out of necessity the 12th month. It's something you should be thinking about all year long, because it is one of the largest, after staffing, could be the second largest expense that you have. And keeping your eye on the ball throughout the year is going to make you a lot happier during tax season. We can show you how. So if you are able to, we'd like to hear from you in the comments. You can say help or more information, or just type anything that makes it clear that you like to get more information from us, and we'll be happy to reach out. We have a first conversation with anyone with no obligation or cost. So let us know, please. And with that, I'm going to wrap up this 1 hour late session of Weekly Profit Talk. We will be back at 8:30 Mountain Time next week on the 16th. So that's, again, 7:30 West Coast, 10:30 East Coast, and 9:30 in the Heartland. So until next week, so long for now. And if you have a chance today, do something randomly kind for a stranger. With that, have an excellent day, and we will talk to you soon. So long for now.